Hey everybody, welcome back to the channel. Today we're going to be going over two new videos by Yahoo Finance and TD Ameritrade talking about Palantir. Now, the reason I like going through these videos and reacting to them is because I like to compare my due diligence as a retail investor and all of the research I'm doing to try to understand a little bit more about Palantir against how the mainstream media is talking about it. You usually come to a couple of conclusions. Either the mainstream media is just starting to echo the points that are kind of bland and generic and like they're just like riding the wave of what everyone else is saying on Wall Street. Or two, they actually might be coming to some fundamental conclusions that only niche retail investors that have actually studied the company and put the dots together already have started to come up with. And if that's starting to go to the mainstream, that's actually really good. Because then it means our due diligence was correct, or our due diligence has at least a chance of being correct. And it's spreading upstream down from retail investors to mainstream, to Wall Street, and then being explicated on the actual mainstream media and kind of going out to the masses. So it's a really interesting thing to kind of see how they talk about it. We're going to start with the first video, which is about 1 minute, and then we're going to go to a second video, which is about 6 minutes. This is from Ken Mahoney, Why to Keep an Eye on Palantir Stock.
Are you too? With your first pick, it jumped out to me, and that's Palantir. This is a stock that has had a massive run up. Yes, it's been volatile, but it's up 170% since the start of the year. Some on Wall Street are cautioning right now, saying it's not the time to jump in, but you see more upside potential. What's the catalyst?
So the catalyst is government contracts. You know, this doesn't really get all the buy ratings and strong buy ratings because of the way they came public. They didn't go through investment banking. They kind of did direct. So they kind of snubbed Wall Street a little bit. So they don't.
He is right about that. Palantir choosing to go through DPO versus IPO has left them a bad taste in Wall Street's mouth because Wall Street couldn't really make money off the DPO for a long time. And eventually that'll change when they grow, but it's kind of related to why they haven't done as well in the past couple of years.
They don't get all the love, but it's contract after contract. They hit a high yesterday at the open at 19, settling down around 17. Look, the runway, by the way, next month is their earnings. We don't like to hold a lot of positions overnight to earnings. Example, Netflix and Tesla. But we do think there's a little runway here to make some money. We think it's exciting longer term once we get past this earnings season, because again, it could be sell the news. But Palantir looks like in good shape. A good way to play AI outside NVIDIA, Microsoft, the obvious ones. This one makes a lot of sense to us.
And Ken, let's get right.
So this was interesting. He didn't do a ton of analysis there. I'm going to Google this guy real quick because I actually never heard of him, even though I feel like his name comes up a bunch of times. Ken Mahoney. He is the president of Mahoney Asset Management. All right. So the dude is a market expert for 31 years. So he's part of the mainstream world, part of Wall Street. So I guess if he's saying take a look at Palantir, then it's starting to, the tides are starting to change a little bit. It's not just this guy on YouTube. It's more so someone who's been managing money for a long time. The reason I think he's interested is because of AI. I mean, he quite literally says, you know, it's an AI play. If you want to play it as AI, then think about it from that perspective. Another video, Palantir's AI excitement is providing a significant lift. This is TD Ameritrade. Let's listen to them.
Next year investing, it's time for under 30 as we take a look at Palantir. And wow, you know, Jenny, I gotta admit, I haven't had my eye on this one as much the last few weeks. I knew it had made a really impressive run in recent months. We had talked about it a few times. I looked down, it's $17.43, basically on its year-to-date highs. And this stock started around $6 at some points this year. I mean, it's impressive.
It is impressive. New 52-week highs in today's session, continuing to rip higher, up over 6%. So here to tell us what's now driving this move higher, I'd like to welcome in Jeff Pierce, Senior Manager of Derivatives Trading.
Why does their background look like it's a green screen? Is that just me? Does this look like a green screen, or is that just me? I don't know. It feels like it's just me, maybe. All right, but let's hear what he has to say.
Trading for TD Ameritrade. So Jeff, walk us through this move, not only today, but also over the course of this year, because like Alex said, this name has been on a nice run.
That's right. Well, we're seeing the almost 7% move today as Mizuho raises the firm's price target from $8 up to $14, kept the neutral rating on the shares. The analyst said while software companies remains challenged by macroeconomic pressures and uncertainty, investor sentiment has decidedly improved in the recent months, with generative AI excitement providing a significant lift. The firm says Q2 checks have had puts and takes, but overall they're reflective of an even more stability than what we saw in the prior quarter.
So this is a price analyst upgrade we got from Mizuho. I actually heard about this, but I didn't cover it last week. So 8 to 14, which is really nice. I mean, that's close to like 80% gains. Generative AI excitement providing a significant lift, and their second quarter check showed even more stability than the prior quarter, which means it seems like they're expecting a decent Q2 earnings for Palantir.
He did keep a neutral rating on the shares and noted the doubling of the stock price since their last earnings report. And this has really been the story for Palantir. Analysts have applauded their position in AI, but they have been concerned over their valuation, what the next catalyst is to send the shares higher. The stock has really followed the ups and downs that we've seen the other names in AI have, with AI optimism very high, but interest rates and inflation pressures continuing to wear on all of them. We saw them host their first ever AI platform conference at the start of June. The CEO reiterated that the company's seen unprecedented demand for their AI products. To put it into perspective, he said Palantir had received as many calls in 1 month as they had previously received in a year. And we just
So the same quotes that Wall Street, that I talk about on my channel, is the same exact quotes that Wall Street is talking about. I mean, like, again, there's only one CEO, only one company. I've said this quote many times. I've been trying to sort of rationalize and conceptualize, okay, is this like something that matters? Should I be taking it seriously? So if I'm taking it seriously, if I'm considering it and I'm taking Carp at his word, I guess these other Wall Street guys are as well.
just saw them report their second consecutive quarter of positive net income. In Q4 of 2022, they came in at about 31 million. In Q1 of 2023, came in at about 17 million in net income.
You know, when you're looking at this one, Jeff, obviously the ties to the U.S. government are helpful, given that that check is typically blank and it can last for a long time if you have a good relationship with the government, of course. But the growth opportunities are going to need to kind of go beyond that. They're going to have to get, key partnerships with other companies when it comes to data analytics and the AI stuff that they're working on. But this has been almost like a meme stock at times as well. It's sort of got that same sort of cultural following where there is a lot of optimism on this name. It does seem to be somewhat polarizing. There's, not believers, and then there's the believers when it comes to it. But you can't escape from the really tremendous year-to-date performance, basically going 3x, but so many names are seemingly doing that right now. Names the size of Meta and Nvidia have basically done the same. So when you're looking at this one, Jeff, you never want to say is now different, but this would be alarming in other times, but they're not alone with this much excitement to the upside. Is potentially still an exciting time for this space despite these incredible moves.
Yeah, and I think that's what investors are looking at, is reality versus expectations, right? If you look at the Q1 report, I mean, you mentioned the government contracts. That makes up around 50 to 60% of their revenue, up 20% year over year in Q1. We saw commercial up double digits. We saw U.S. revenue up double digits. We saw their total customer count increase 41% year over year, 50% in the U.S. And they had a good outlook as well, raising their full year expectations to 2.185 to 2.235 billion.
That's the only part I would disagree with. Again, this guy doesn't seem to follow it that closely. That was not a raising of expectations. That was decreasing from 30% year over year growth to 18%. And that's what we think they're sandbagging. And if they are sandbagging that, the market's going to be very happy. But, it's a question of if they are or not.
The question for a lot of investors out there is what is already built into the stock? We know AI has got a big push. We've seen these names push through a lot of these headwinds, including the inflation pressures. But the big question is, if we've got this Q2 earnings report, which is coming up early next month, and you've got so much expectation built in the stock, is this one of those scenarios where we could see some possible profit taking if they miss just slightly in one area?
Which is possible. I'm going to do my Q2 deep dive a little bit later. I don't think they're going to miss on any areas, but I am so conflicted about Q2. Part of me wants to load up on a bunch of leaps before Q2 because I think it's actually going to go really well. And the other part of me is like, it's a $40 billion company. Unless they show some decent growth, the premium that Wall Street is giving it is just not going to be there. So it's just, I'm confused about it, but there could be a sell-off. There could be profit taking.
Yeah, and I think that's a major concern for so many of these names. I mean, C3 AI is another one that comes to mind that has had a run this year. So then what do their earnings look like going forward? Because we'll be able to meet these really high expectations. But as far as Palantir goes, Alex mentioned this almost has like meme stock potential, but I was shocked to see its percent of its shares that are sold short is only like 7%, which is well below like AMC, GameStop, Carvana has like 62%. So this name, while we do see this really resurgence in interest in Palantir, I mean, it's not seeing the same amount of short selling as the other meme stocks. Yeah,
absolutely. And I think a big part of it is the AI aspect. I mean, this name has really been kind of set for this AI atmosphere before ChatGPT and other names really started to push forward, and then that's really given some legitimacy to the name for a lot of investors out there. That's why we have seen some of this kind of meme stock push behind it, but there's also been your standard investors that are really looking at the facts here. And you talked about new deals. They're continuing to see them. Last week we saw them expand their partnership with Carasoft Technology. They're going to distribute for Palantir, which will make their Apollo platform more available to the public sector. Yes, about 60% of their revenue comes from federal government, used mostly by those defense applications, but that has been something that, we've seen from the company for a long time. Their AI side of the platform could push over into their government revenue as well. And I think the expectations are high. And so it's not just that meme stock craze. We are seeing investors look at this as more of kind of a long-term name with a big runway for AI.
Yeah, and perhaps seeing some signs of maturity in Palantir. And I do recall from discussing this name all year long, we've gotten major fundamental and guidance updates that have propelled shares higher. It hasn't just been all on hype, like you said. So important to differentiate this name from the meme stock nature in which I think a lot of times it was associated with, at least in former years. But we will leave it there. Appreciate the breakdown.
So not bad. I mean, look, I think he's making a ton of arguments that make sense in regards to the AI component, destigmatizing the meme stock stuff. Obviously, like, yes, did it have its meme stock moment? Of course, but I think that's changed. And the reason that's changed is because you've got really big institutional investors looking at this company kind of like how retail's looking at it, which is that no. This could be the next Oracle. This could be the next Salesforce. They're doing really important things. That's what a lot of the video content and Twitter content that is created in the community is about. It's not just, it's going to go to $1,000. Like, so I think it's different from an AMC. I think it's different from a GameStop. And I think the shares held short, I think, are a reflection of that. There's no way you could have a short squeeze on Palantir. There's just not enough people shorting it. And the reason there's not enough people shorting it is because especially the institutions know that we can't short a company that can potentially have a blowout quarter in the next couple quarters or in this current quarter, because they are not just riding the AI wave. They're actually doing AI. And so if you want to short Palantir and they have a really amazing quarter because they're saying their new platform is being adopted, they have all these public companies that are using their stuff, your shorts are going to get killed, right? It's just not going to be good for you. So I think that explains the lack of short interest, and obviously generative AI applications and the way the market's treating it. The hype has not died down because I think the hype is real. The question becomes, can Palantir be one of those 5 to 10 companies over the next decade that is the beneficiary of that hype, of that premium, because they're able to perform in their results, because they actually have something meaningful the market wants. So we'll see what happens. Mainstream media talking a little bit more about Palantir. Let me know your thoughts on what you think, how Wall Street is interpreting Palantir, and I'll see you guys in the next one.